Hi, this is Shweta from ClearTax. Today I will discuss about ITR-3 form. ITR-3 form is required for individuals and HUFs who have income from business or profession. You can disclose your income from all other sources such as income from house property, capital gains and other sources when you file your ITR-3 form. You can also claim the deductions and the exemptions. In this video, I will discuss what is the ITR-3 form in terms of what are the contents of the ITR-3 form, and I will discuss what are the significant changes to the ITR-3 form for the assessment year 2021. Before discussing what are the contents of the ITR-3 form and the significant changes for the assessment year 2021, let me just tell you about the extended due date for filing. The due date now is 31st December 2020 in case you have income from business and you're filing ITR-3, but when your accounts are not subject to a tax audit. However, if your accounts are subject to tax audit, then your due date for filing the return is 31st January 2021. Your audit, however, should be completed by 31st December 2020. So let us discuss the contents of the ITR-3 form. We start with Part A. Part A, first you need to fill your general information and the nature of business. You need to fill the details of your balance sheet as on 31st March 2020, your assets and your liabilities. In case you are an entity which is carrying out manufacturing, in that case you need to fill in the manufacturing account. Then you need to fill the details of your trading account of your business, the details of your purchases, sales, and you have to fill in your profit and loss account, that is the details of your expenses and other business incomes. You have to fill in the other information sheet. This is optional in case you are not liable for a tax audit. You have to fill in the quantitative details. This is also optional in case you do not have a liability to carry out a tax audit. Next, we will discuss the various schedules, which are essentially the part of the income disclosure under various heads. The first schedule is a schedule for salaries. You can disclose your income from salaries. Then you have a schedule for income from house property, wherein you need to disclose the details of your house property, the tenants, the PAN of the tenants, and the rent at which you have let out the property. You can claim the deduction for municipal tax and for interest on housing loan over here. Next, you disclose your income from your business. While disclosing your income from business, you need to disclose the depreciation you are claiming under the Income Tax Act. You need to disclose the details of the assets and the additions to the assets. You need to disclose next the capital gains income that you have. You have a separate schedule, Schedule 112A, for disclosing the details of capital gains from long-term capital gains of listed equity shares and equity-oriented mutual funds. The other schedules which are specific to non-residents such as 115AD. Next, you need to disclose your other income details and in case you have any carry forward losses or brought forward losses. For example, if you have a brought forward loss from the previous year, which is a long-term capital loss, you can show the same over here, and if you are setting it off, you need to disclose the set of the loss. You can similarly carry forward losses of the current year, and you can also carry forward the brought forward loss of the previous year in case you're not setting it off in the current year. After this, you need to disclose in specific disclosures for claiming deductions. You will have disclosure for claiming deductions for ADG, which is Statement of Donations. You can disclose any other donations made to research associations, and if you have any specific deductions to your business such as ATIA, IB or ICIE, you can claim the same. You need to disclose the deductions you are claiming for tax saving under Schedule 6A. That is your deductions claimed for housing loan repayments, for LIC, paid, PPF, NSC, ELSS, such kind of investments. In case you have any other income which is chargeable to special tax rates, you need to disclose the same. And if you have any income arising under the clubbing provisions or income of your minor child, which is clubbed along with your income, you should disclose the income of the same under a separate schedule. In case you are a partner in a partnership firm, you can disclose the details of the share of profit as well as any salary income from the same. There is a separate schedule for claiming any relief in respect of income you earn from outside India. You can claim the credit for taxes paid outside India. In Schedule FA, you disclose the foreign assets and income from any source outside India. In case your income is above Rs 50 lakh, you have to give a disclosure about your assets and liabilities at the end of the year. For the financial year 2019-20, due to COVID-19, government extended the due date for claiming tax saving investments. The due date was extended up to 31st July 2020. You can claim the deductions by making disclosure under Schedule DI. for the tax saving investments. In Schedule GST, with respect to your business, you have to disclose your turnover or your gross receipts as reported for GST. In the next part, which includes your details of your total income, your income under the different heads will be aggregated over here and the taxes will be calculated on the same. You can claim the credit for advance tax for TDS or TCS, and you have to pay any balance tax liability before filing the income tax return. Next, we will discuss what are the major changes for the assessment year 2021 for the purpose of filing ITR-3. First, a taxpayer has to disclose in case the taxpayer has made any cash deposits exceeding 1 crore or has incurred expenditure greater than 2 lakh on foreign travel on themselves or any other person, or has incurred expenditure above rupees 1 lakh on electricity. These three are additional criteria which are brought in assessment year 2021 for the purpose of filing. So, an example where a person has incurred any of these expenses but is not liable to file an income tax return because his income is below the taxable limit. So he has to tick the criteria that is applicable to him and file the return. The next change is with respect to a director of a company. In a case where an individual is a director of a company or a person who's holding unlisted equity investments in any company, he had to make certain disclosures with respect to the company, the investment amount, the opening balance, as well as in case where he's a director, he has to mention the DIN number. So there is an additional requirement this year that the type of company should also be disclosed in addition to the PAN of the company and other details. The next change is with respect to any short-term or long-term capital gains that you have from immovable property, that is land or building or both. Here you need to disclose the details of the buyer, the name, PAN or Aadhaar of the buyer, the percentage of the share of ownership and the address. All these details are necessary. Next, a separate schedule is added, Schedule 112A, for the purpose of calculating long-term capital gains in case of grandfathered capital gains. These are for the shares which were brought before 31st January or up to 31st January 2018 and the gains of the same were grandfathered. In such a case, a person needs to have the fair market value in hand as of 31st January 2018. So for this purpose, the person has to fill in this schedule to arrive at the correct long-term capital gains from listed shares or listed equity-oriented mutual funds. The next change is with respect to income from other sources. In case you have income from any other source, you have to disclose the nature of the source of the income. Similarly, you have to provide the details of the deductions that you claim against income from other sources. The deductions you claim under Schedule 6A is amended to include a deduction under Section 80EEA, that is interest on housing loan for affordable housing, and deduction under 80EEB, which is a deduction for interest taken on loan for a electric vehicle. These amendments were brought in Finance Act 2019 and applicable for the assessment year 2021, hence the same are also included. With respect to taxpayer who is subject to transfer pricing adjustments, they need to provide the details of the tax on secondary adjustments to the transfer price under Section 92C, subsection 2A. The details have to be provided in a separate schedule, Schedule DPSA. Next is Schedule DI. We discussed Schedule DI, which allows you to claim deductions for investments for tax saving made in the extended period from 1st April 2020 until 31st July 2020. Similarly, a benefit was given for capital gains rollover. You can claim the deduction under Section 54, 54F for investment in house property or investment in notified bonds. Such investment could be done until 30th September 2020 and you could claim deduction for the same. Lastly, while providing your details of your bank account, you can select multiple bank accounts, and if you do so, the income tax department has a choice to process the refund to any of the bank accounts. So, where you do not specifically mention a particular bank account in which you wish to have your refund, the income tax department can credit your refund to any of the accounts which you have mentioned in the income tax return. So with this, we come to the closure of the discussion for ITR-3. Do bear in mind that ITR-3 is a specific form for income from business or profession, and it does not apply to companies. They have to file a separate ITR. ClearTax's e-filing software will enable you to file the return without going through the hassle of choosing the type of ITR form applicable to you. So do log into our site and do check out our e-filing platform, which will enable you to have a hassle-free filing. Thank you for watching. Do like and share our video, and do subscribe to our channel. Thanks.